Universal Music Group, or UMG, the powerhouse behind chart-topping artists like Taylor Swift and Drake, shocked the entire world when it pulled all of the music from artists it represents from TikTok after its contract with the social media site expired. UMG claimed that TikTok has been refusing to pay their artists their well-deserved dues and expressed its fears of AI-generated music taking over TikTok and stealing the money of real artists by mimicking them. This is a nightmare that UMG wants to avoid at all costs, but TikTok fired back by calling UMG greedy and arguing that their decision hurts both the artists and the fans. Now, if you're an investor in UMG's UMGNF stock or any other music stock, this news might have given you a scare, but what if I told you that there is one strong catalyst that could drive the stocks of music stocks up, even if the UMG and TikTok issue isn't solved? In this video, we're going to tell you all about this catalyst, but before we do that, we're going to explore how this feud started, talk about who has more to lose, and how it'll likely play out. So don't miss out. Welcome back to PST Markets. This might be one of the biggest feuds in the music industry's history, so how did it start? According to UMG, TikTok attempted to bully the record label into accepting a licensing deal worth less than the one they previously had going on. TikTok was trying to build a music-based business without paying fair value for the music. The world's largest music company made it clear that it has three main concerns with TikTok, which should be addressed for its contract with the platform to be renewed. These concerns are securing higher compensation for artists, protections against AI-generated music flooding the platform, and bolstering online safety. Speaking of securing compensation for artists, UMG also accused TikTok of sabotaging smaller artists by selectively removing their music from the platform, while continuing to promote UMG's more famous performers. In response, TikTok put out a statement in which it bluntly called UMG greedy, saying that TikTok managed to reach agreements that prioritize the artists with every other label, and that UMG's actions are self-serving and are not in the best interests of the artists and the fans. The fight between record labels and TikTok is nothing new, as it all started in 2022 when TikTok was on track to earn $12 billion, and the labels began asking it to share the wealth with rights holders. In addition to that, in February of last year, the labels were especially worried because TikTok had started limiting the number of songs users in Australia could choose for their videos, as they saw it as TikTok testing the value of music on the service and how its use impacts user behavior. They thought that TikTok was planning to use this against them in contract negotiations. Just like TikTok said in its statement, the two other major record companies, Warner Music Group Corporation and Sony Music, have reached new licensing deals with the platform. While we don't know the exact terms of these deals since they weren't made public, we know that the companies were pleased with them. While it could be considered fair that TikTok is rejecting UMG's actions, since all the other record labels were happy to reach a settlement, it should also be considered fair for UMG to look at how massive TikTok grew to be and think about how a deal with it compares to its other partners to decide if it's a fair deal. And that's exactly what UMG did. The company is positioning TikTok as a more established platform and compares it to YouTube, which operates a valuable ad business. It also said TikTok pays the artists a fraction of the rate that similarly situated major social platforms pay. Since UMG claims to be doing all of this for the artists, what are their opinions on this? The music community has mixed views on the feud, as Grammy-winning producer Jack Antonoff criticized UMG's decision and called it backward. At the same time, smaller and foreign artists supported the decision because pulling off the music of the big players in the industry could result in the music of smaller artists gaining more exposure and becoming more popular. If you're a frequent user of TikTok, then you probably could already see the impact of UMG's departure, and TikTok itself is definitely feeling it too. Since the start of February, around 33% of TikTok's top music streams have left the platform. Right now, there are no signs that an agreement will be reached soon, and a standoff like this will likely end up losing money on all sides, from musicians who are getting less exposure, to labels making less cash, to social media sites getting fewer views. But who has more to lose? While the two companies both have things to lose, TikTok arguably has more to lose from UMG pulling off its catalog from the social media platform. UMG says that TikTok contributes to only 1% of its total revenue. Some industry insiders say that it could be even less, since the players in the music industry don't really depend on TikTok to make money, since it's known for not paying a lot. But what they ultimately want from TikTok is the exposure to 1 billion users it offers, which can make a song go viral very quickly. In fact, artists like Halsey and Charlie XCX have previously talked about being pressured by their labels to make music that could go viral on TikTok or increase their presence on the platform. At the same time, 50/50's agency, Attract, invested more than $6 million in TikTok marketing for the group's song, Cupid, to go viral. So this exposure is what UMG would be losing, but the company still has the world's biggest artists under its umbrella, and this is what TikTok would be losing. The problem is, this is TikTok's whole selling point, since what it offers is basically letting you choose from any song on the platform to make a video with. And why would anyone use TikTok if it didn't allow music from the world's biggest artists? Notably, according to a Goldman Sachs report, when TikTok reduced the number of songs people could use in Australia, the platform ended up underperforming in the country. Chris Pavies, president of Broyhill Asset Management, which has UMG as one of its top 5 holdings, wrote to Barron's and said that he supported the company's decision and that it will eventually result in a much better deal for UMG. So will TikTok eventually give in and agree to UMG's terms? I think this will be the case, since TikTok simply has a lot more to lose, and UMG wouldn't be pulling its catalog from the platform if it didn't think it could get a better deal out of it. There have also been similar cases to this in the past, as Warner Music Group took its music off Alphabet Incorporated's YouTube in 2008 when licensing talks stalled, only to reach a deal 9 months later. What does this mean for investors in music stocks like Spot Stock, WMG Stock, and UNVG Stock? If you're an investor in any big company in the music industry, you shouldn't let this dispute distract you. In fact, the industry is healthier and more investable than it has been in years. Shares of 3 key players in the industry, UMG, Spotify, and Warner Music Group, are each up more than 40% since the music label stocks bottomed in May, thanks to an AI-generated Drake and The Weeknd collab going viral after it was posted to music streaming services by an anonymous user. You might think that this is ridiculous and that no one would actually listen to AI-generated music of their favorite artists. Still, the big record labels think AI is extremely dangerous because it can divert money away from real musicians and music labels and toward people using technology to mimic them. In fact, this fake collaboration resulted in UMG's UNVG stock falling by 20% in 2 months, and Warner Music Group's WMG stock fell by around 30% for the same period. So it's no surprise that UMG is asking TikTok for stronger protection against AI-generated music. As a matter of fact, UMG's refusal to renew its contract with TikTok could be just about AI rather than fighting for the rights of artists. This is because music companies were trading at all-time lows when AI-generated music was blowing up in mid-2023, which has led streaming services like Spotify and Apple Music to increase the prices of their subscription plans, and labels to negotiate better contracts with streaming services. Now, music stocks are doing better than ever, partially thanks to recent layoffs of hundreds of employees by both UMG and Warner Music Group. Still, the most important factor driving the great performance of music stock was Spotify's decision last year to raise prices on its premium plans in the US for the first time in its history. It was just a $1 increase, but now it has begun making a real difference to Spotify's revenue, and the labels are helped since they get about 70% of each streaming dollar. Spotify will report earnings in April, and the streaming platform is expected to post its first annual profit since its IPO in 2018, thanks to increasing its prices, 2 rounds of layoffs, and cuts to its money-losing podcast department. Notably, Spotify has seen no drop-off in customers since raising prices, with strong user growth in Q4 of 2023. The company also said that it has 3 ways to increase revenue in the future, including more price hikes, new business lines like a marketplace that helps artists target their audience, and adding more users. These plans cause analysts to project Spotify to earn $3.71 per share this year, growing to $8.21 by 2027, which adds to the bullish case regarding Spot stock and the music stocks of the labels. Another good thing Spotify did for the labels is that it transitioned its payment model in a way that favors labels, as the streaming platform started demonetizing content that doesn't get enough stream, which may be unfortunate for smaller artists but will ultimately benefit the labels. Additionally, music stocks benefit because music shows no sign of slowing down, and streaming is going very strong. In fact, global streams in 2023 were more than 7.1 trillion, which is a 33.7% year-on-year increase. Warner Music Group's CEO Robert Kyncl praised what Spotify was doing when it comes to paying music labels in the company's most recent earnings call. At the same time, UMG is set to report earnings on the 28th of February. Whether or not the TikTok feud has been solved by then, the company's future looks bright. Well, that is everything for now. What do you think? Will you be buying any music stock? Please let us know what you think in the comments below. And if you haven't, please subscribe and leave a like for this video. Your support helps us continue our work. Thanks again for your support, and I will see you in the next one.